Okay, so for this video, we are now going to cover Schedule E, which is used to report the income and all the taxes paid on those profits, right? So these are taxes that are going to be paid directly by the foreign corporation, or they may be taxes withheld on income paid to the foreign corporation. And it also includes taxes that are basically deemed paid by other companies, right? So when you have a CFC that's multiple tiers of entities, so they have a lot of subsidiaries. If you have income that's flowing up as PTEP, you might be able to take a foreign tax credit for the deemed foreign taxes paid by those lower tier subs. Now for this example, you notice when we go through it that not a lot of this is filled out by us. And the reason for that is because this example, again, we're going with a very simple example here. There's no taxes that are being paid by the foreign corporation, right? Either deemed paid, withholding, or paid at the company level, right? And there's a number of reasons for that. So if we look at our profit and loss again here, we have the income, we have our expenses here, but this is a company set up in the Cayman Islands, right? So the Cayman Islands doesn't impose any taxes on profits. All of the investments by the company are in other types of entities that don't incur any taxes, nor do they have any withholding taxes at source, and we don't have any U.S. source withholding taxes. So we're not going to have any taxes that are going to be reported on any of these line items. But nevertheless, you still have to complete the schedule if you qualify as one of those category of filers, right? So if we look at our schedule here, where we talk about the different required information that must be included depending on the category of filer, we see here separate Schedule E must be attached if we have 1A, B, or C, or a category 4, 5A, 5B, or 5C filer. Now remember that John here is basically almost all of those, so we definitely need to complete the Schedule E and attach it to the 5471, even though that we're not going to have any taxes that are actually going to be paid or reported here, right? Okay, so the Schedule E is broken out into three parts. We have Part 1, Part 2, Part 3. Part 1 here, taxes for which a foreign tax credit is allowed. This is where we would report those taxes that were paid by the company directly. Okay. Now, why is this important? The reason why this is important is because the taxes that you pay at the entity level can be deducted in arriving at your earnings and profits, so that's good. But corporate taxpayers and individuals that make what's called a Section 962 election can do what is further called a Section 78 gross up. So Section 78 gross up means that you can gross up the amount of your foreign, your Subpart F income inclusion in order to take a foreign tax credit on your return, right? And so in order to be able to do that, they need more information on the foreign taxes paid, and this is where you would include it. Now you can see here, we still list the name of the company, right? So we have Fake Offshore Company Limited, the reference number. It's a Cayman Islands, so CJ company, the tax year. But when we get down here on the income items, income subject to tax in the foreign jurisdiction is just zero. It can be blank because, again, we're not paying any taxes in the Cayman Islands. If we did have to pay tax, it would be in Caymanian dollars, so KYD. But again, no taxes paid, no need to do any conversions, nothing like that. Okay, so that's why in this example, again, very straightforward. It's largely blank. I will have other tutorials that cover more complicated situations where you do have a variety of taxes that need to be disclosed. But for purposes of this video and this fact pattern, Section 1 is just, it's going to look as is, right? Not much more that we need to put down there. Now, Section 2, even if you're subject to taxes, could be blank depending on whether you have any deemed taxes paid, right? So in column A here, they're asking what are the lower tier distributing foreign corporations. So if you had a tier, so multiple foreign corporations, so multiple tiers, and there were foreign taxes paid at the lower tier entities, if you have PTEP, so previously taxed earnings and profits, that is being distributed up to the parent company. So if we look at the structure chart, try to visualize this. This is our parent company, that's the CFC. If we had a bunch of other CFCs underneath here, so we had multiple tiers, and the lower entities down here, we're paying tax and distributing the income and the taxes up to the parent, then you would have these lower tier distributing FC issues. But again, in our example, we've got none of that, right? So we don't have lower tier entities. We don't have lower tier PTEP or deemed taxes paid coming up from those entities. Now, if we go on to the second page here, Part 2, so remember there's 3 parts to Schedule E. Part 2 is an election. So they're asking here, it's just a yes or no question. For years after 2004, has an election been made under 986A1D to translate taxes using the exchange rate on the date of payment? Why are they asking that? Because under the rules in 986, when we compute, when we translate amounts from the foreign currency to the US dollar, you're supposed to use the average exchange rate for the tax year that applies to the income. Okay, so it's the average exchange rate for the year. Alternatively, if you want to be more precise, you can make an election to use the exchange rate on the date you made the payment, right? So what's the spot rate on the date you made the payment? In this case, we haven't made any tax payments. We're not making the election, so that's why we've simply just answered no. If you did make this election, you would answer yes and then enter the date that the election was made, okay? Now, Part 3 here. Part 3, Schedule E1, we'll talk about in the next video, but Part 3 covers taxes for which a foreign tax credit is being disallowed, okay? Now, what do we mean by that? Well, there are certain types of foreign taxes paid that for public policy reasons or some other provision of the code, you're actually not allowed to take a tax credit for these payments. So in this section here, the name of the payor entity, EIN, a reference number, you would enter those. So if this was our company, we could have Fake Offshore Company Limited down there. And then they have a variety of columns here, C through I, where you list out the specific reason why the foreign tax credit would be disallowed. Right, so for example, 901J, this covers foreign taxes paid to countries where the U.S. doesn't get along with, right? So we've severed diplomatic relations, so there are export or bans or controls. So 901J, for example, would be if you had a controlled foreign corporation that was paying taxes to North Korea, Iran, Syria, a bunch of other countries on that list. Because their taxes paid to those types of governments, you're not allowed a tax credit for the amounts. So if you had taxes paid, you would enter those amounts in column C there, right? Column D, section 901K, for example, covers withholding taxes on closely held corporations on the dividend payments where you didn't own the stock long enough. So it's kind of an obscure rule, but basically they're saying, look, if you bought this stock and it's a closely held company and you got a dividend payment that was subject to withholding tax, but you didn't hold the stock long enough to meet the provisions in 901K, then you can't take a foreign tax credit, okay? Bit bizarre, but the rules are the rules. Column F there, U.S. taxes. This is kind of an obvious one, but it's important to list it just for completeness. This schedule is designed to compute the amount of foreign tax credit you can pay. Foreign tax credit meaning it has to be non-U.S., right? So if you have taxes paid to the U.S. either through withholding or directly, those amounts have to be separately stated here, and you can't use them during your Section 78 gross up, to calculate, to add to the foreign tax credit pool. Because again, it's not a foreign country, it is the U.S. Okay, so that's why those have to be separately stated there. All right, so that covers it for Schedule E. Again, very simple example, largely blank given our fact pattern, but I will have other tutorials that cover Schedule E in more detail, where we do have a lot of this information completed because we have taxes paid either directly, deemed paid, and the like. So again, that covers it for this video, and I will see you on the next video for Schedule E1.